The chair will now recognize the gentleman from Kentucky, Mr. Barr, who is the ranking member of the subcommittee, for 5 minutes.
Thank you, Mr. Chairman, and again, thanks for holding this important hearing, and thank you to my friend from Ohio for recognizing so many young faces out there. I do think it's unconscionable, the level of debt that so many young people today have to deal with. It's deferring home ownership, it's deferring marriage, it's deferring retirement savings, it's producing a savings crisis in this country, and it's unfortunate that federal policy is enticing so many students to take on too much debt, especially with the degrees and the income that can be produced for repayment. I think that's something that we all have to really assess as policymakers. Mr. Buchanan, since 2010, when President Obama nationalized the student loan system, the Department of Education has become the largest consumer lender in the country. Your association is made up of student loan servicers whom are contracted by the Department of Education to ensure borrowers repay those loans. There seems to be some confusion as to the role of servicing companies in the $1.5 trillion student debt crisis, and I'm hoping you can help me clear up the confusion. Do student loan servicers advise students as to which school to attend or which degree to pursue?
We do not.
Do student loan servicers set tuition rates?
We do not.
Do student loan servicers advise a student as to how much money to borrow?
We do not.
Do student loan servicers set the terms of the loan?
We do not.
Do student loan servicers set the interest rate for the loan?
We do not.
Do student loan servicers create the forbearance or deferment option that is available to students?
We do not.
And who did create the forbearance option?
Congress did.
Thank you. So it sounds like all the factors that are driving the growth in total student debt in this country, things like lack of information available to students entering college, high tuition rates, low graduation rates, not to mention the interest rate in terms of the loan, those are all set long before the borrower even makes contact with a loan servicing company.
That is correct.
Now, Mrs. Darkus made, I think, an important point. She talked about this forbearance, and all of the witnesses are talking about this forbearance or deferment option. As I recall, Ms. Darkus's testimony was that forbearance and deferment is a profitable option for the servicers. I want to explore that a little bit with you, Mr. Buchanan. Do student loan servicers make more money? Are they more profitable by placing students into forbearance status?
We are paid far less for any borrower that's in a forbearance status. In fact, the numbers are clear. So we are paid on a monthly basis $1.05 to service a borrower who's in forbearance. We are paid $2.85 for a borrower who's in a repayment plan.
So you're paid less if the student goes into forbearance?
That is correct.
So if student loan servicers have no financial incentive to move students into forbearance status, why are so many students moving into forbearance status?
Well, the rates of forbearance utilization have declined over the last few years. Right now, approximately 10 or 11% of borrowers utilize forbearance. But it's important to understand what forbearance is used for many times. When someone applies, for example, for an income-based repayment plan and that borrower is already delinquent on their accounts, many servicers apply a forbearance in order to bring that borrower current, which is useful to that borrower because if we do not use the forbearance, they will come delinquent and get credit bureau reports.
And again, Congress created that option. The servicing industry did not. Mr. Smith, is it Mr. Smith?
Yes.
Mr. Smith, I appreciated your testimony that borrowers facing financial hardship, often income-driven repayment plans are generally much better than multiple forbearances. I couldn't agree with you more. Repaying the loan instead of forbearance makes a whole lot of sense to me, especially if you can. Obviously, a lot of these students are facing financial hardship. My question to you is, since your office sued because of this issue, this problem, should Congress reform the federal student loan program to repeal the forbearance option?
That's an interesting question. We haven't given it thought, and I think it would be impractical for the reason that Mr. Buchanan explained, that forbearance is sometimes used to help people when they're delinquent and getting into IDR.
Right, so it's helpful. So you're saying Congress shouldn't mandate IDR?
I think that it would be helpful if IDR were the default option. In other words, if if there were easier steps to getting people into IDR. And I think Congress should explore prohibiting multiple consecutive forbearances, which is the significant harm that we found and that we talk about in our
My time has expired, but I appreciate the recognition that IDR is better, but that Congress is really the responsible party here. I yield back.